Today, we have an update on the US labor market. Affordability is on everyone's minds right now, with inflation being the biggest concern. Interestingly enough, we are seeing energy prices drop, but gasoline prices aren't following the same trend. Let's get into some numbers. Inflation is currently sitting above 3%, higher than the Federal Reserve's target of 2%. Keeping things in perspective, inflation is lower under Trump than what we saw under Biden. While crude oil prices have dipped by approximately 20% this year, gasoline prices have only diminished marginally, creating a mismatch in consumer expectations. While inflation is concerning, it's not always a problem if wages keep pace. Average hourly earnings in the US increased by 3.7% over the past year, which marks a slowdown in wage growth. When adjusted for changes in consumer prices, real average hourly earnings increased by 0.7% over the same period. Today, we explore the labor economy, where total employment is about 163 million, according to the latest available data from the Bureau of Labor Statistics for August 2025. Total US unemployment stood at approximately 4.3%. Johns Hopkins University's Workers Lab reveals that over a quarter of the workforce is now engaged in gig jobs. Private sector job growth has seen a decline of 11,000 jobs on average over the past 4 weeks. The unemployment rate remains steady at about 4%, less than the average in past decades. However, two-thirds of Americans are now living paycheck to paycheck. The recent government shutdown kept vital reports from being released, offering a temporary reprieve to investors and the public. Before the shutdown, layoffs in October surged by 175% compared to last year, totaling over 150,000 jobs lost. Challenger, Gray, and Christmas highlighted that seasonal hiring is at its lowest since 29. A look into deeper figures shows a steep decline in job openings. Analysts are keeping an eye on a potential recession using patterns like the beverage curve, a key indicator. These curves show that job openings to unemployment fell to precarious levels just before the shutdown in August. The narrative around AI suggests massive job losses, yet only about 48,000 of the million job cuts this year were attributed to AI, making up just 4.8 of total layoffs. While it mainly affected the tech sector, there is a consensus that broader impacts are still emerging. Looking ahead, the next administration faces the challenge of adapting policies to a shifting economic landscape, with the prime age labor force growing by an estimated 0.5% annually, creating opportunities in neglected sectors like elder care and infrastructure through initiatives such as a civilian labor corps becomes vital. Thank you for watching and stay tuned for more insights into the world of economics. Please comment, like, and subscribe.